All right. Thanks everyone for joining for our monthly DeFi Toronto meetup. This is our kind of midsummer meetup for July, just post ECC. We've got some amazing speakers lined up for today. Apologies for the mix-up with the Zoom link. I think we'll probably see more people streaming in as they find the updated link. And of course, for anyone that misses the meetup, we are going to be posting the recording as usual, so people will have that to view later on as well. All right, so let's get started. We'll jump to our first slide, and we'll do a quick introduction of the team. Just quick one-liners across. My name is Aline Kamisa. I am one of the original founding team members for DeFi Toronto. I'm working with a company called Delve, and we build DeFi infrastructure, protocols, and governance systems. We're currently working on a new AMM, and we'll have more details on that soon. Imran is not able to be with us today, but he's working on a project called langwallet.ai, and hopefully he'll be able to present that at a future meetup. Off to you, Victor.
Thank you, Ali. I used to work on traditional finance for over 20 years, mainly in pension investment. Now I do fundamental research for a crypto hedge fund called Foreign Capital. But my passion is always running this DeFi Toronto meetup group. We grow from a few people in 2019 to now we have over 2,500 people. So it's great to be here with great speaker. So I'm going to pass on to Mark.
Thank you, Victor. So I'm Mark. So I just left a think tank that was focusing on growing the digital economy to work on a special project. So more on that later. And I'm leading a number of groups and communities here in particular the IEEE blockchain for the Canada region. And also I'm a founding member of La French Tech Toronto. I've been involved in education for a long time and digital transformation.
Awesome. And do we have Johnson here?
Johnson is going to join us at 7:30, so he'll be back in soon.
Perfect. And Sophia wasn't able to make it today, but she is she's with ChainSafe Systems, just based out of Toronto, and hopefully she'll be able to make the next one. Next one. Next slide. Okay, great. So the agenda for today, we're as per usual, we will do. I think Victor just one back. We'll start with the DeFi news recap. So we'll kind of recap some of the major developments over the last month. And then we'll get right into our speakers. So we'll have Darren Langley, who's joining us from Australia, from Rocket Pool, who's going to be talking about democratizing Ethereum staking. Then we'll get into our second speaker, so Hemanth Soni, who's going to talk about building the next generation of Web3 apps. We'll have a quick, maybe 1 to 2 minute break. We might just kind of roll through that for any community announcements. If anyone is working on a new project, looking for a co-founder, looking for funding, this would be a great venue to kind of make that quick announcement. This is, of course, a community event, so we want to make sure that we can engage with one another as much as possible and help each other out. And finally, we'll finish off with our last speaker, who's Maharshi Patel, who will be talking about finding DeFi alpha using Blockscope, no-code tools. And then we'll wrap it up there. And just a quick PSA for those of you who have your mic unmuted, please make sure that you're muted. And let's continue. So I'll hand it back to Mark and to Victor for the DeFi news recap.
Mark, do you want to talk about the the Futures Conference?
Yes, I get started. So everyone here knows the Futurist Conference, which has been working for the last 10 years. That's where you meet all the OGs in Canada. So of course, DeFi Toronto, and we're really proud to be part of it and supporting this event. This year is going to be even greater and bigger with not only the conference, but also ETH Toronto. I think ETH Women is also there. And if you Google Canada Crypto Week, you'll find a lot of satellite events to your, every taste. So you have a code here for registration. There's a discount that's still running up. And there's been also a contest running in the community. So we should be announcing the winners of free tickets very soon. So the team will be at DeFi Toronto. We'll have a little bit of a panel where we'll review a year in DeFi and highlighting some of the main challenges that remain ahead of us. So stay tuned for that and don't miss, of course, the conference. Another event activity at the conference is a little bit of a special event. It's going to take place outside near the Canada Pool, and we named it very appropriately the Deep Dive on Conference. And we're going to have different tables with the different groups representing the Toronto blockchain and crypto community here. And you can see the names of some of them on AI, crypto, DeFi, decentralized science, the metaverse, Web3, refi. So it's a good cross section of what's happening here in town. And please come in and engage. We'll be talking to the participants of the Futurist Conference in an on-conference manner, which is basically we're taking notes, and at the end there will be a report to the conference attendees. But there will also be a written report that will come out of it, so that will hopefully paint a fair picture of the blockchain space in Toronto and in Canada. So moving up. So you can see some of the main groups attending there, and I leave it there to Victor to talk about the DeFi news recap.
Okay, thank you, Mark. Let's jump into it. As our ecosystem growth in DeFi in Web3, we always need capital funding for startup. The bad news is that in Q2 compared to the Q2 of last year, the total funding for blockchain and crypto startup has down significantly. But that's not just unique to the Web3, the blockchain sector. In fact, across all the sector in total, it's down about 18% year over year. So overall, there's a decrease in the venture capital flow into startup. But we also have some bright spot in number of high profile funding, like Layer 0 protocol raised $120 million. That's very significant. We have Worldcoin, which founded by the OpenAI's the founder, so that was also a big deal, 150 million. So there's some bright startup able to raise quite significant money. So we still remain hopeful that the crypto space will continue to attract more capital. Recently, A16Z, published some index to track the state of the crypto space, and I found it's quite useful. I'm going to just share some of the chart that I find interesting. On the left, we have a decentralized exchange, the trading volume. As you can see, it was a peak in the late 2021, around November, and then gradually come down, almost down by more than half. So the trading volume is definitely they've been down, but that also reflect the price, right? So because the token price has declined. Therefore, the total dollar value also come down as well. So it might reflect the price as much as reflect in the number of transactions. On the left, as we know that 2021, 22, we have this NFT boom. A lot of new NFT was mint and trade. And similarly, to the left-hand side chart, we can see the number of people buying and selling an NFT has come down substantially. So except except some high-profile NFT token that's still trading actively, but the trading volume has come down quite significantly. Okay, next one. Look at the active address, the active blockchain address across not just Ethereum, but across number of blockchain, then they aggregate. Well, we see that number continue to go up. So that's pretty positive. That shows that there's people still active, still interested in blockchain. Job search, the number of search on Google, on internet, they are looking, the people who are looking for crypto-related job, has been peaked in early 2022, has come down quite a bit. Still, if you compare to a few years ago, we are still in the very healthy number of jobs, public interest in to work in the crypto space. Then we look at the developer and developer side. So the number of active developer has been continuing to grow, even though it has come down somewhat from early 2022, but the long-term trend is still pretty positive. We go back to 5-10 years ago is much smaller. Even at 2019, 2020, where the market was very, very active, was still lower than today. So today's number of developers still very strong from the historical average. And number of the smart contract was deployed on the blockchain also continue to grow. There's no slowdown. That's also very healthy. It means that people are building application, building smart contract, and deploy on the blockchain. Finally, this two index is an aggregate composite index. So basically, A16Z is create a composite index that measure number of indicator. For example, on the left-hand side is tracking all the innovation indicator, basically the supply side. The number of active developer, number of smart contract being deployed, number of job search related to crypto. So they combine all those different index to create a composite index. And you can see that is still we're at a very high level, even though it's come down from early 2022. But the long-term trend is still very positive. On the adoption side, though, it seems there's a significant decline in terms of adoption that basically measure the demand side. For example, the DX trading volume, the number of active address, the NFT buyer, and so on and so forth. Those the measure the adoption that has a quite dramatic decline from the peak of late 2021. So that's a more aggregated view on innovation on supply side than compared to adoption on the demand side. So there's many other chart. I'm not going to able to cover every chart. So you can check, just Google, A16Z state of crypto index. And since our meetup is called DeFi Toronto, so we always want to look at specifically on a DeFi space. So this chart is from Glassnodes, and they aggregate the major DeFi project, the token, create an index, and look at the long-term performance in both in US dollar and in Ether term. And as you can see, in the early 2021, we have the peak, almost the peak of the price of the token price, DeFi token price. Since then, it has declined in both US dollar term, but also declined relative to Ether. So what's happening? Why this is happening? So I did some research, try to figure out, what the industry expert, the people in the field say about this trend. So here's what I find: article in DeFi, and also some report from Glassnode. So here's the 4 reasons that might be the reason behind the DeFi tokens underperformance. Number 1, the staking, Ether staking. So Ether staking come on, live, and they offer very attractive yield. So far it's always above 4%. Sometimes it's as high as 8%. So the yield is very attractive in that, and also is simpler to earn this reward compared to DeFi yield farming. DeFi farming is more, yield farming is more complicated. You have potential impermanent loss. So more technical. Here you have potentially lower risk and a simpler method to earn a yield, very attractive. So DeFi token basically have to compete with Ether to offer something that more attractive. Number 2, token economic design. One of the criticism is that for some DeFi project, particularly Uniswap, the tokens have no direct connection with the platform's adoption or success. What in the case of Uniswap is that the transaction fee that the platform charge to the trader are not give to Uniswap token holder. They all pay to the liquidity provider. So there's lack of a direct connection between the usage of the platform and the token holder, the benefit. So that's another criticism. Number 3 is that governance issue. Apparently, some of the DeFi DAO has struggled with a governance issue. They may not agree on the roadmap, or they may not agree on certain initiative. So that is also an issue here. And apparently, some major crypto fund has selling MakerDAO's token. Number 4, finally, is the inflation token reward. So some of the DeFi token reward the user by issuing more their government token. Well, that's nice to attract to user, but that also means that you are create inflation to existing token holder. Basically, you are taxing existing token holder because you dilute their holding. So what users usually do? Well, they usually do just receive the token reward and then they just sell it in the market. So that add pressure on those tokens. So that's 4 possible reasons I can find on the web. And last week we have Ethereum community conference held in Paris. Apparently, it's well done. I know that Alim, you attend the conference, right?
Yes, I was in Paris.
Might not hear me.
Yep, I'm here. Can you hear me? Yeah, I was in.
How was that? Can you?
Yeah, just a quick 10 seconds. I'm actually still in France right now, and I'll be back in Toronto in a few days. But the ECC conference in Paris was absolutely incredible. I've been to a lot of crypto conferences over the last several years, and this one by far was my most favorite. Really high quality speakers and talks, lots of great networking events and side events. And of course it was Paris. So, for meetings and whatnot, there were some beautiful cafes to kind of network at and host those meetings.
Great. Alim, you and I went to DEF CON in Colombia, how would you compare this conference with other conference? Is there any like a number of attendees or anything that you can share?
Yeah, I think DEF CON was bigger in Bogota. The content might have been a little bit more technical for DEF CON than, there are many streams than I'm speaking generally about the content at ECC. But overall, yeah, I think this one was, people like to kind of meet up at ECC in Paris, and it's a great opportunity for people to kind of reconnect in person or whatnot. So I think there was a lot of there's a really big social aspect to this conference as well, and lots of side events happening like DAOCon, DeFi Security Summit. There was a SheFi event that happened on the Sunday before ECC as well. So overall, yeah, lots going on. Lots of tons and tons of events happening in the orbit of ECC.
Okay, great. Thanks, Lin, for sharing your observation there. Yeah, there's a lot of announcement, and here just some of the more highlight a more well-known project that making the announcement. So you can check out Bankless website. They have a list all the major announcement and with a description, so you will get a better picture. Here I'm not going to repeat all the details, but I'm list 6 more important one here. Okay, and finally on Aave DAO, they launched a stablecoin called Gold. I presume that the first 3 letters of a ghost. So that you look at the little character, look like a ghost, and it is US dollar pegged stablecoin, similar to DAI, I would say. So it's collateralized with different asset like Ether, Aave token, DAI, even Bitcoin. So they are promised to be transparent, and all the interest rate that they earn will directly go to the Aave DAO treasury to support the community development. So that's great. And so far, I checked this morning that there's about 8.2 million stablecoin has been mint so far. Okay, so yeah, I will pass on to Mark.
Yeah, so I'll be brief, but there are so many important news this month, like every month. So just to point out, cybersecurity, DeFi is, as we've seen before, is one of the highest area in the blockchain space that's under threat by cybersecurity. A couple of things. Of course, there is a lot of hacks. I mean, it's obviously non-exhaustive. I would draw your attention to the bottom right, the Yearn Finance Challenge. There's some money there. If you feel like you're a hacker and you want to try your muscles on Yearn Finance, you can win a prize. Another concerning thing and important thing to remember is to stay safe. If you look at the top left, there have been concerning news from Canadian police that large crypto investors have been identified and their houses are being robbed. So stay safe out there. Moving to the next one. I think we're going to move to a little bit of the legislation and a little bit of the world outlook after that. There are a lot of things happening in the US at the moment. As you know, it's a little bit of a battlefield in the US with the crypto. So 3 bills are on the way. There are 2 on the Senate floor. The first one has been put forward by Senators Jack Reed and Mark Warner, and with Mitt Romney and Mike Rounds. It's a bipartisan bill, as most of them, I think all of them are bipartisan actually. And this one is takes an angle of the fentanyl and the opioid crisis, and avoiding, putting a brake on allegation that the drug cartels and the North Korean and so forth are taking advantage of this. So they are basing, very interestingly, they are basing their the bill and some of the arguments on a recent report from Elliptic that is making that case, that a lot of the money is actually going to fund precursor manufacturing from China and shipping everything to Mexico so that the cartels can just create the fentanyl there to provide that terrible drug to the US. It creates so many havoc there. So so the bill is on the Senate floor. There is a second bill on the Senate floor, Victor, which is from Senator Kirsten Gillibrand and Cynthia Loomis. This one is a little more balanced, I think we could say. It has a more positive mindset, looking at responsible financial innovation. It's going to be the name of the bill is the Responsible Financial Innovation Act, and it makes an interesting point into providing clearer definition, which is really a good thing and probably one of the success factors from the European MiCA or MiCA regulation. Providing clear definitions is always good. They're also looking at clarifying the roles of the SEC and the CFTC, what's a community, what's a security, which is definitely very useful. And looking at stable coins, which have been on the radar for most of us since the Terra Luna debacle there. So I'll let you read a little bit more about that one, which is definitely a little bit more balanced, and look at positioning the US as a leader, or to continue to be a leader on the financial sector on the world scale, looking at CBDCs and tax treatment and other things like that. On the third bill is on the House now, and it's actually coming from the subcommittee on digital assets and financial technology and inclusion. So it's a bipartisan effort from that subcommittee that passed the bill now to the House floor. It's actually part of a package of 6 bills. 2 of them are being related to blockchain. The most important one, arguably, being the Financial Innovation and Technology for the 21st Century Act, which is, again, trying to strike the right balance. And they're looking at the SEC versus CFTC and trying to provide more clarity there. One other bill is the Blockchain Regulatory Certainty Act by Representative Tom Emmer that sponsored the bill, and this one is looking at things like the responsibility of blockchain developers, which is very important. If you remember last year, Tornado Cash and developers being liable for some consequences of using the protocol, even though the protocol is live on the blockchain. So watch out for those bills, and certainly the US is a big place for financial services, among the G7 for sure in the world. So we'll all be looking closely about what's happening in the US. Next one, Victor. So we're gonna go. We cannot fail to mention the judgment passed by a judge, I think it's Torres, on Ripple, which has been well received. And basically, the judge has said, yes, it could be a security, but it's not necessarily a security. It depends who you are. So if you're a retail investor, buying XRP tokens would not be considered a security. So it's been taken as a very good news by the community, of course, very well received, which is providing a very good signal that a lot of people from our community want to see. However, we don't know if the SEC is going to appeal to the decision, and it could go to Supreme Court. There is a lot of debates about what could be the move next from the SEC and how to position this next. So we are not out of the woods yet, but it's a very good signal. Next slide, Victor. Okay, so the other thing that we mentioned, the SVB, we did actually on the face-to-face event back in the winter. We talked a lot about SVB and FedNow, and now FedNow is live. It's direct, so it's basically the Federal Reserve meets instant payment. So it's a little bit funny because the US has been behind 24/7 payments, which is available on many countries, and that's what crypto was doing very well, has been doing very well. So now it's available, and you can look. There is a link there. It's very interesting. They have a little university, so they're trying to teach you about instant payment. So a couple of things about that. It's a little bit of a threat to PayPal and Venmo in particular, because now, I mean, you can read more about this, but it's a different system. Of course, you're tapping into the Federal Reserve rather than being on a closed loop. It's a little bit of a different system. Another issue, I think it's the next slide, Victor, that Caitlin Long has been very vocal about, is who has access to be part of this, right? Of course, you have the banks, but she found out that actually one fintech, that's the only fintech that's in there, shouldn't be in there, according to her, is from Europe, because they got a banking license from Europe. And suddenly there is whole kind of issues about fairness and who has access to the FedNow, who doesn't have access. And she made an earlier tweet today about actually, I think there's been a lot of suits and court case coming up because so basically the the Federal Reserve is going to be sued for that kind of those behaviors. So stay tuned on that. Don't want to stay too long on this one. So very quick updates about the world now. MiCA regulation I just talked about, it's in the official journal, which means it's actually official now. And the regulation will start to apply December 30, 2024. You can look at the publication yourself. Next one, the UK is launching again their sandbox. So if you're interested in trying something new, and you can work with the regulator in the UK, same thing, you can go to their sandbox and they are giving you instructions how to apply. So it's starting August 1st, I think, for a number of applications. Now back in Europe, on the Europe side, like France, you know, has been very early with the PSAN regulation. I think DSAB or DS, something like that in English, which has been a proto regulation that inspired MiCA. And the Société Générale, so SocGen, has just received a crypto license. So there is a little bit of a graduation. First, if you want to do crypto exchanges and trading and so forth, you need to register. So that gives you, registration is the first level. A license is the higher level of duty and compliance with the regulator. So it's a very strong sign that the regulator is working hand in hand with the banks. And interestingly, Société Générale, well, they've been doing experiments for many years, putting bonds on the Ethereum network. And they just created a euro stablecoin recently, I think in the spring, April, I think. So so that's moving on. Italy there's some interesting work with Polygon and with the central bank there and Fireblocks. So something to watch out. So because it's definitely related to DeFi. And on the, is there another one? I think there is another one. No, that was the last one. So stay tuned for some more news. And without further ado, I'm going to give it back to maybe Victor to present the first speaker.
Thank you, Mark. Okay, our first speaker is something that the topic has been in news for the last couple of years, is about staking, liquid staking. And today we are honored to have Darren Langley, the general manager of Rocket Pool, to speak to us. And Rocket Pool is the third largest liquid staking platform, and it's decentralized, more decentralized, I would say, more decentralized than other alternatives. And Darren has bring a lot of valuable insight to the DeFi space, and he's passionate about bring blockchain technology to empower individuals. So now I'm going to pass on to Darren. Welcome.
Thank you, Victor. Thank you very much.
Darren,
yep. Should I share my slides? Should I can probably.
Yes,
not sure
please.
If I can actually. There we go. That one. Okay. Can you guys see that now?
Yes.
You're on.
Excellent. All right, cool. So as Victor said, thank you very much, Victor, and guys for hosting me today. I am Darren Langley. I am the general manager of the Rocket Pool core team. So Rocket Pool is actually a DAO. It's actually like 2 DAOs. It has like a 2 DAO system for its governance, and we have about 3,000 node operators who actually form our kind of governance. And kind of drive the protocol forward. But the Rocket Pool core team are kind of like a shelling point and also kind of do a lot of the technical work. So this talk is obviously an introduction to Rocket Pool, but it's also by virtue you can't really talk about Rocket Pool without talking about Ethereum staking, because that's what it's built on. So we'll briefly go into what Ethereum staking is, what problem Rocket Pool solves with that, how Rocket Pool works, and then where Rocket Pool is today. So proof of stake. So the merge happened back in September last year, and so now Ethereum is proof of stake. So what does that really mean? In theory, it means that anyone with ETH can actually participate in securing the Ethereum blockchain. So, when a bunch of transactions get formed into a block, this is actually done by Ethereum proof of stake validators who are staking their ETH. The stake is actually like a good behavior bond. So if you do a good job, you are paid a return on your ETH. If you try to do something kind of against Ethereum or you break the Ethereum protocol, then your stake can actually. How kind of secure is Ethereum today? So there is 22 million ETH staked. That's around 41 billion US dollars or 54 billion Canadian dollars. You would have to put at risk about 35 billion Canadian dollars to actually finalize a conflicting block. So that's what we call kind of economic security. And that's how kind of, Ethereum maintains that security, is through that kind of economic guarantee. So, why would somebody want to stake their ETH? So first of all, you're helping to secure Ethereum. And as we said, there's a lot of people who are helping to secure Ethereum. And the more people that actually do that process, the more secure Ethereum is, and the more likely it is for it to kind of, achieve its vision of being like this global settlement layer. You also earn rewards. So there are different kind of like types of rewards that you get, execution rewards and consensus rewards. But ultimately it's a return on your ETH. And it's currently about 4.8%. That's variable, I should say. In reality, there is kind of like a high barrier to entry. So you need 32 ETH, and that's like a fixed 32 ETH. And you need to do that in like 32 ETH increments as well. So it's about 80,000 Canadian dollars per validator, and it kind of goes 32, 64, etc. You also need enough technical knowledge to run an Ethereum node as well. So Rocket Pool's product is actually built on proof of stake, and we've been developing it in parallel with the Ethereum core teams for about 7 years, actually. Essentially, ever since proof of stake was mentioned for Ethereum, we've been there. So Rocket Pool's goal is to make Ethereum staking available to everyone. And the way we do that is by overcoming the barriers that I mentioned. So Rocket Pool is actually a decentralized liquid staking protocol, and I'll kind of like break that down a little bit. So there are two sides to the protocol. So protocol basically just means it's a DeFi protocol. It's made up of smart contracts that are hosted on the Ethereum blockchain. There are two sides to the protocol. You have on one side you have liquid stakers, or liquid staking, which is the simplest way to stake your ETH today. You just swap ETH for, in our case, our ETH, which is our liquid staking token, and then you are staking. That's it. There is no technical knowledge required. You don't need to run a node. You can stake any amount. And when you want to unstake, you can either do it through Rocket Pool if we have enough liquidity to do so, or you can exchange it back on a decentralized exchange. The great thing about ETH or liquid staking in general is that whether you acquire it on a layer 1, so on Ethereum mainnet, or on a layer 2, such as Optimism, Arbitrum, ZK Sync, Polygon, whatever, it doesn't matter. Wherever you acquire it, as long as you're holding that token, you are kind of like benefiting from the rewards. Additionally, you can take ETH and you can use it in DeFi. So you can put it into a liquidity platform, you can borrow against it, you can put it into an options platform, a fixed income, interest rate swaps, all while you are earning those proof of stake rewards. So it's a pretty powerful primitive, and I'll talk a little bit more on that side of things a bit later. So on the other side of the protocol is node staking, and this is essentially what makes Rocket Pool special, is that anyone can be a node operator with Rocket Pool. So usually you need enough technical knowledge to run an Ethereum validating node. Usually you need, usually outside of Rocket Pool, you would need 32 ETH to be a node operator, but with Rocket Pool, you need 8. So we kind of like reduce that considerably. You actually need 8 ETH plus 2.4 ETH of RPL as well, which is our native token. But we reduce that kind of like barrier to entry for running a node. The protocol matches 8 ETH from node operators, and it matches it 24 ETH from liquid stakers. So that's essentially what the protocol does. It just matchmakes between node operators and liquid stakers to make the 32 that can go to the proof of stake system and earn those rewards. Because a node operator actually brings their own collateral, they are economically aligned to perform. So they want to earn a good yield on their ETH as well, and so they're economically aligned with our ETH stakers to do the best job that they can. The other benefit that this has is Ethereum staking is low risk, but it's not risk free. So there is a risk of slashing if you do the wrong thing, and in this case, the node operator takes that on. There's a lot of tools and that sort of thing to kind of make sure that doesn't happen. But essentially, their ETH is also used as like a backstop or as an insurance to make sure that our ETH holders are kind of protected against those slashing events. So as a node operator, you get staking rewards on your 8 ETH, but you also get a commission on the rewards that you generate for liquid stakers. So it's actually 14% today. So you earn 14% of the rewards that you generate for liquid stakers. And so being a node operator with Rocket Pool, you actually earn considerably more than what you would do outside of Rocket Pool. The other way that we kind of lower barrier to entry is we have this thing called the Smart Node Stack, which is a piece of software that streamlines setting up and running a node to kind of like lower that technical barrier. We've also have an amazing community that have onboarded hundreds and hundreds of new node operators. We also have like a testnet where you can kind of try it out with essentially fake money before you commit to the real thing. Okay, so we released a mainnet in November 2021. So we're just coming up to 2 years on mainnet, which is an eternity in crypto. We have over 3,000 node operators operating in over 100 different geographic locations. We are staking about 850,000 ETH, which is about 1.5 billion US dollars or 2.2 billion Canadian dollars. We represent over 3.8% of all the staked ETH in Ethereum's proof of stake today. On the liquid staking side, we are the third largest, as Victor said, we're the third largest liquid staking platform behind kind of Lido and Coinbase, but we are growing very, very quickly. So DeFi. DeFi utility. So one of the things we try to do as much as possible is to provide lots and lots of utility for rETH. So one of the things you can do with rETH is obviously just keep it, hold it, that's it, and that's perfectly fine. It will kind of earn the staking rewards from the Ethereum proof of stake system, but that you also have the kind of option to choose your own adventure. And you can kind of earn liquidity, trade fees or incentives by providing liquidity to an AMM. You can borrow against it in lending platforms. We're currently on Aave, Maker, Spark, Silo, and a few other kind of lending platforms. There's a lot of decentralized stablecoins that are coming out. So Victor mentioned GHO from Aave, and you will eventually be able to mint Go or GHO against rETH collateral as well. There are lots of indexes that kind of like take a bunch of these liquid staking tokens and put them together to form kind of an index. And then you also have yield vaults that sit on top of the liquidity and the lending platforms generally, and they implement kind of automated strategies to kind of like optimize that yield. So obviously none of this is financial advice. You can do so much, but you have to do your own research and be very, very mindful of the risks, particularly with DeFi protocols. But with liquid staking, there is a whole new kind of branch of DeFi called LSDeFi, which are kind of like focusing on using liquid staking tokens because it's one of the first or most reliable kind of yield-bearing tokens. And so there will be a lot of innovation in the space going forward around using kind of liquid staking tokens within DeFi. Existing protocols are already starting to do this, like Balancer, for example, and Aave are starting to do this. But other kind of new protocols are coming out that use this new superpower. And that's been me. So thank you very much. I am Langers on Twitter or X or whatever you want to call it nowadays. And if you want to learn more, then you can go to our website, which is rocketpool.net.
Thank you, Darren. Fascinating platform. Very very support. Your mission. I have a couple questions. How do you compete with Lido, right? If I'm as a staker, the yield on Lido is higher than the Rocket Pool, but I'm sure there's some benefit that people would consider choosing between these two. What's your advice? What should we consider when we pick a platform?
Yeah, no, that's good. So there's a couple of things there. So there's actually like a short-term issue that at the moment makes our APR look slightly less than Lido's, and that is mainly just a victim of our own success. So we released our Atlas deployment, I think it was like 2 months ago, and we got a huge, we grew massively. And so a lot of our validators are actually waiting in the validator queue. And so that's what's kind of dampening our APR in the short term. That the APR is starting to go back up again now. So it's as our kind of like validators start to come online. So that's definitely something to kind of bear in mind in terms of that. The APR difference between us and Lido is actually closing, and actually is actually quite close. The only other thing there is also the fact that Lido has a lot of stake, and one of the things that a lot of people in the Ethereum community, particularly like the Ethereum researchers, such as Vitalik and Danny Ryan, are saying that this is not a good thing for any one provider to have too much of the stake. So that is definitely one thing to bear in mind, because if you go with Lido, if they get beyond a particular threshold, they can start to threaten or undermine Ethereum. That's not necessarily to say that they will, but they could. And so that's definitely something to kind of bear in mind. The other thing to bear in mind is that, to be honest, you should probably not have all your eggs in one basket anyway. Particularly if you're a large staker, you should want to spread your kind of risk, and so putting it with different providers is also a good idea from a basic risk management perspective. So they're definitely the things to consider there. One thing to consider is that, as you said, so Rocket Pool is by far the most decentralized. So Lido have 29 node operators, and we have over 3,000. So that's the level of difference there. The reason why decentralization is so important is it's important to Ethereum. So for Ethereum to be censorship resistant, for Ethereum to kind of meet this goal of being credibly neutral, its validator set has to be decentralized. And so having all that stake on resting on 29 node operators is not great. And for us, we are a permissionless node operator set, so we have very, very wide base on which to have that stake. But yeah, that's the general gist.
Thank you, Darren. Any question for our speaker, for Darren?
There's a question from the chat, Victor.
Oh.
Right. The payback period.
Okay.
All right. Okay, cool. So in terms of the payback period, I will need to double check. So our node operators, our community have put together, there's a whole bunch of spreadsheets that our community have put together to calculate that kind of like payback period, where all of the figures are dynamically generated. So you can actually use those spreadsheets to do that. I would definitely join our Discord. So if you go to our website, rocketpool.net, and join our Discord, our community will definitely take you through all of that stuff. They're extremely responsive. In terms of how someone unstakes their RETH, so there's two ways you can do it. You can do it directly with Rocket Pool, which essentially, so you can unstake with Rocket Pool, or you can unstake on the secondary market, and that's it. When I say unstake on the secondary market, I mean you swap RETH for ETH on Uniswap or Balancer, or use 1inch or something like that to route the order. And in actual fact, 1inch actually does it actually looks at us as well as the protocol, and if it's cheap, if you get more value from going via us than via the open market, it'll actually go via us rather than the open market. So you can kind of do it through 1inch, and it'll just choose the best out.
Any other question for Darren? Maybe one last question from me, Darren. So Lido on Lido, the platform, and no operator would take in total take 10% of the reward as a fee. On Rocket Pool is 14%, if I understand correctly.
Yeah.
And they all go to the node operator. So from node operator perspective, it's very attractive on your platform. But from the staker perspective, 10% and the 14%, it's not insignificant. But are there any plan by Rocket Pool to plan to narrow that gap?
So yeah. So actually, 14% is kind of there for a kind of a developmental purpose. So originally we had like a dynamic commission rate, and so it would actually go up to like 20% if there was strong demand for RETH, but that caused some issues where the APR started the overall commission rate started to go up. In other words, RETH holders were paying more, so we fixed it at 15%. And then with our moved to LEB8s, which is this 8 ETH thing, we've dropped it to 14, but we couldn't take it any lower, unfortunately, because we needed to motivate people to go from these like 20% validators to 14%. So we actually are reducing it down quite considerably. We will look at the commission rate over time. One of the things that might drive that is we may even go to like LEB4s, which is node operators requiring only 4 ETH, in which case we can drop the commission rate even further. So that's another way that we can potentially do that. But yeah, it is something that we're kind of quite mindful of.
Sorry, somebody have a question?
Water. Not bottled water. Not even tap water. Water. When's the last time you had water? You're welcome. Just about everybody. We haven't yet, but we'll start now.
I did.
Test bump a little bit after every slide. Go right ahead.
Sounds like someone is forgetting to mute.
Really don't.
There we go. Moving on.
Thank you. Johnson, you have a question?
Yeah.
Johnson?
Yeah. So my question is regarding compounding rewards. So with respect to a solo validator, right? A solo validator has 32 ETH, and it would probably take a lot of years before a solo validator like accrues enough ETH to spin up another solo validator. Until then, like all that ETH, the reward, it's just there, like it's not producing more. Now, with respect to someone like Lido with like tens of thousands of ETH each operator, they could easily like make yield accrue that 32 ETH, spin up new validators. Now, what I see with Rocket Pool is like with LEB8s, a solo validator does not have to wait for rewards to accrue on that 32 ETH, but like they as long as they accrue say 8 ETH, they could spin up another validator and put that ETH to work. Now, over the long term, I see like there are like two ways to go about. Like one is like reduce that requirement to say 4 or even 2, or even in the long term 1, so that it's much easier to compound that ETH that you accrue as a reward. Or the other way would be to incentivize in DeFi pools and get a return from there, so that your overall staking yield is like competitive in the market. So which of the two routes are is say Rocket Pool kind of prioritizing to expand the protocol in the future?
So, I mean, so in some senses, we do compound kind of internally within the protocol. So all of the ETH that belongs to our ETH holders, that actually gets recycled, or a lot of it actually. So there's a part that's left that's kind of like kept for withdrawals, but above that, all of the ETH is kind of recycled. So from a protocol perspective, that recycling kind of already happens within the protocol. From a node operator perspective, the only tricky part is as you lower. So yes, you kind of lowering the barrier of entry is definitely useful for that. The only issue there is that as you lower your ETH per validator, the amount you earn is actually lower. So it comes down linearly with that. So so it might take you longer to get 1 ETH than with the 1 ETH validator than it would with a 4, for example. So that's definitely something. We are looking at 4 ETH mini pools is what we'll call it. So that is definitely something that we are looking at. There's a few things that we need to deliver first, though. In one of the big things that we're delivering is so once Cancun, which is the next Ethereum release, happens, it includes something that's just amazing for us, and that's this thing called the Beacon State Root EIP, and that enables us to do some amazing stuff. So the first thing we'll do is we'll deliver this thing called megapools, is what we're calling it, but it's essentially one smart contract that represents the node instead of each individual kind of like mini pool, each individual validator being a mini pool. That reduces the cost for node operators by the amount that it's going to reduce it by is just horrendous. So that's going to make it a lot quicker from a payback perspective. First of all, it won't cost them as much to spin up validators. It won't cost them as much to distribute their rewards. And so all of that will kind of like help with that, being able to recycle the ETH back into the protocol for more validators.
Exciting. Thank you.
Thank you, Darren. I think we should move on to our next speaker, given time. I'll pass back to Mark. Are you taking over as MC, right?
Yeah, okay. I can. It's my great pleasure to introduce Hemanth Soni. Soni is a seasoned builder in the Web3 space with multiple experiences in taking products from 0 to 1, both in crypto, Helika, Conduit, and in data with Novisto. Hemanth is now the growth lead at Goldsky, a high-performance Web3 data infrastructure company. His talk will walk through his learning in building through different areas of crypto and his predictions for the future. And I'll let you. All right, you're already sharing your presentation, so we're all set. The floor is yours.
Yeah, can you see this okay?
Yes,
and can you hear me all right?
Perfect.
Awesome. Hey everyone, my name is Hemanth. I'm the growth lead at Goldsky. I've been building businesses in Web3 for a few years now. Previously launched 2 companies, a Latin American focused on-ramp and off-ramp called Conduit Financial that works with some of the larger financial institutions in the region. And more recently, the company that I built out was a Web3 product analytics platform called Helika that runs the backend and internal analytics engines for companies like Yuga Labs, Animoca, and a few others. So these experiences combined with what I'm doing now at Goldsky have kind of given me a perspective on where I think the industry is headed and the parallels I see to previous work in Web2. So that's really the focus of what I wanted to talk about today, is sharing where I kind of see the future of next-gen dApps going. So for a bit of context, Goldsky is a data infrastructure company powering the data stack for probably many of the companies that you know, Aave, Polymarket, POAPs, Aura, Hashflow, Arweave, and many others. And we're increasingly seeing that a good, data backend is an unfair advantage for folks building and trading in the Web3 space. And real-time data is the core of exactly that. So if you look at Web2, the tech evolved over time. First, we had, black and white static pages hosted by universities. Then we had images. We had Flash, which was not a good time. Eventually, YouTube, Instagram, and everything we have now. And we're kind of seeing a similar scale and trend in the crypto space. But to understand where we're headed, we have to kind of take a look at where we started. So early dApps looked something like this, and it's hilarious because Etherscan hasn't changed a whole lot since these early days. What you see is what you get. You get chain level information, primarily just getting raw information out there. And you don't really understand what's happening unless you're deeply, deeply involved in the space. What's going on? How much, gas did someone pay in real dollars? What was their real transaction fee? Who are these people? What are they doing? Are they buying NFTs? Are they trading on Uniswap? All this information is here, but you have to sift through it, and it's highly technical, and you need extra context to make it useful. You need price information, you need NFT images, you need to understand a lot more than what you get. Since then, we've obviously evolved. We've solved the problem of context. We have apps and products on top of the Ethereum network and others that give us dApps 2.0. So here's an example of that. Here's OpenSea, where the data is starting to look more interesting. We have some utility, we have some actual value visible. We have pictures, we have prices, we have usernames. But what all of this added context means is more data complexity. Where does this price come from? We need to get a dollar number from somewhere. And what is that exchange rate? Who gives you that information? That isn't raw and on-chain natively. And solving for that creates a ton of new complexity around joining information from different sources. That means that data needs to be calculated, needs to be refreshed, and that all takes some time. This, again, is better than what we saw before. It meets the bar of a usable application, but it doesn't exactly, bring joy. And now we take a look at where we are today with dApps 3.0. So here's a live screenshot from Blur. If you're not familiar with the story, OpenSea was dominant for a very long time, had 90, 95% plus market share, and nobody could touch them. And in the span of a couple of months, Blur completely took over, partially with a better experience, and then partially because they redesigned how you think about NFTs and made them more like DeFi rather than fungible or rather non-fungible collectibles. But what really enabled this is rich and real-time data. It's live, you can see what's happening without even clicking a button. And every second there are updates as new information comes in. You're still getting the same underlying information, but now it's very, very fast, and that completely changes the dynamics. And this, you'd think, is awesome. Like, we've done it. Blur is great. We finally have an application that rivals our experiences in Web 2. It's fast, it's real-time, it has context, it's enriched, it's usable. This is all pretty great. And is this like what the whole definition of next-gen dApps really is about? Not quite, because there's still a problem here, and that is price. In order to do what Blur did, they raised $10 million and hired a team of highly experienced software engineers to make this happen. The data engineering it takes to do this is quite complex, and that barrier of entry to building good apps is still way, way, way too high, and very different than in Web 2. So we have this new issue. We fixed the context problem, we fixed the latency problem, and now we need to make it affordable and accessible. And why really is that hard? It sounds like it shouldn't be. And again, in Web 2, we're used to this. I can spin up an app that would scale to millions of users over a weekend in Web 2. But the data infrastructure in Web 3 is specifically hard, and it won't go into all of the details for this conversation. But dealing with reorgs, mixing on-chain and off-chain information, harmonizing information across multiple chains if you're dealing with that, are not problems that we had to deal with in the Web 2 space. You can use subgraphs if you want to and deal with multiple weeks of reindexing every time you want to iterate, or you can pay some exorbitant RPC bills, or set up a streaming data pipeline, which requires a ton of serious data engineering know-how. And none of those are a good option for an early stage company or an individual exploring how to build on or in Web3. You want to spend your time and effort and budget on the actual product, on the ultimate value you're trying to create. And that's really what Goldsky is about. So I mentioned earlier on, we're a data infrastructure company. Ultimately, we abstract away all of this complexity and make it really, really simple to extract and load blockchain data in real time in the format that you need it in. Again, won't go into the product in detail, but I just want to quickly show you the type of thing that it enables. As a demo, spun up a real-time feed of Uniswap trades across multiple chains, so Ethereum and Optimism. And there's a little link visible. I'm not sure, I can paste it into the chat if it's helpful, but that's live, you can go check it out. This took us about 30 minutes to spin up. And really, this is what we're trying to do. It's enable anyone to build Blur-like experiences, enriched with context and in real time without the price tag. And really, that's the core of the talk. That's really what I wanted to leave you with. We believe that the future of dApp building in Web3 is contextual, it's real time, and it's accessible to anyone. And we really want to make that happen. If you want to hear more about what Goldsky specifically is and what exactly these products are and how it all works, feel free to DM me on Twitter, check out the website. But just wanted to leave you with this idea that we're finally catching up to the development experience that we've had in Web2 for a while now. I'll stop sharing my screen, and if there are any questions, happy to take them, but otherwise can hand it back to the hosts and recover some of the time so that we have enough for the final speaker as well. Yeah, the one question that came in is around which chains we work with. Any EVM chain is supported out of the box. So all the names that you would suspect, such as Binance Smart Chain, Ethereum, Polygon, as well as some of the new emerging ones. So Optimism, Base, Zora, really anything in the Optimism stack, Arbitrum as well. Almost every chain in EVM is already supported out of the box. And then if we don't already have it, we can add support for it pretty quickly. And I will drop the link to the demo as well as to Goldsky in the chat.
Other question for Hemanth? Well, that's amazing. Okay, thank you for the update. We're gonna go for a little break, and of course, you can always reach out directly to the speakers. And then if you have any questions that come up in your mind before the end of the meetup, please feel free to add it in the chat. You can always reach out to the speakers after through their Discord or directly on their communication. So we're gonna go a little bit with a very quick break. We have usually we do these community announcements. So if you have an announcement to make to go, please raise your hand, and we'll get you in line to give a little bit of your own updates. So we want to know what you're up to. Maybe we can start with Johnson, if you're still there, and talk a little bit about the grant.
Yep, no problem. Can we have
Johnson, you want me to show the
yes, the slide, please? Yeah.
Okay. Okay, hold on. Here.
Awesome. Okay, so we have an exciting update. Our Gitcoin grant round, the past one, which happened in May, I think. By now, the Gitcoin grants beta round, we raised 0.55 ETH, which at current terms is about like almost $1,000, a little more than 1,000 US dollars. And for the contributions, we were awarded 897 DAI, matched with 897 DAI to be more accurate, from Gitcoin. And and right now this is our DeFi Toronto treasury, and we'll be using this these funds to like grow the community, marketing, branding, all of that stuff. And we'll be keeping you guys updated soon. On the top left is the POAP that we awarded to the donors. Bottom left is a screenshot from Gitcoin. And on the right is the next Gitcoin grants round that's coming up. So in case you guys missed out on the last Gitcoin grants round, feel free to partake in the next one. It's opening up on August 15th till 29th. And very interestingly, it's likely, I think, to be held on Gitcoin's own layer 2 chain and the Optimism stack, because earlier when it was happening on the Ethereum chain, like gas fees were just too high and people had to pay like $80 to get a transaction through, was when during the banking crisis was happening. So right now they've moved it to layer 2s, and so now the fees should be like sub $5 or something like that. But yeah, it's very exciting. We've got to see how it turns out, how Gitcoin's new layer 2 is going to be like, how it's going to support public goods, and yes, and we would absolutely love your support, and we would be issuing POAPs again this time around. And yeah, that's the update on Gitcoin grants. So thank you, everyone.
Thanks, Johnson. Any community updates from anyone? I don't see any hand raised here. Just want to make sure you're not missing out on your opportunity to say hi or say something of interest to the community here. And we're gonna get Sarah.
Yes, hi everyone. I'm new to this group. I'm actually a Canadian, but I'm living in the US right now. But I wanted to say I am going to go to the ETH Women's Conference next month, and I would love to meet some of you. I think you mentioned you're going to have a booth or something, so I will certainly track you down, but look forward to meeting some of you folks in person.
Yeah, we're going to have a panel, and we'll definitely it will be lovely to meet you and meet you all there with the community at the panel and after the panel as well. So please do sign up to the Futurist conference and see you there. All right, so maybe we'll move on to the next speaker. If you have some more updates, please, you can feel free to use the chat. But now I will introduce you to Maharshi Patel. Maharshi is an ex-Citibank engineer who worked on developing real-time data pipelines for monitoring their infrastructure. He joined the Web3 space in late 2021 by launching an on-chain game. Finding the experience and the developer experience lacking, he and his co-founders set out to build Blockscope, and they've been on a Y Combinator, and that's how I found their project interesting and inviting them to present to this group. So Maharshi, please, you can feel free to share your slides if you have them. There you go. We can see the slides. That's fine, and the floor is yours, sir.
Awesome. Perfect. Can everyone hear me?
Yes.
Awesome. Thanks, Mark, for the introduction. So I came here today. This is my first time on this call. So thanks for having me. I am the co-founder and CTO of Blockscope. It's a company that my co-founder and I, Adit, started early last year to deal with the developer experiences that the poor developer experiences that we had, kind of in a similar vein to Goldsky. You know, while building our own games, we were like going to RPC nodes and we were running up costs. And we decided to kind of build the indexing system that we wanted for our own game internally. From there, we kind of realized, you know, the core of the infrastructure that we built was good. And so we decided to kind of drop that into its own platform, which was like the beginnings of Blockscope. And then over time, we've kind of transform Blockscope into not just an indexing and a data infrastructure platform, but more of a analytics and insight platform is what we like to call it. There are a lot of companies right now that are, in the Web3 space that are providing, data. You can, Nansen, for example, OXScope, Arkham, they all have, advantages and disadvantages. Some of them, but what we find is that they're not easily accessible to most of the users. If you want to start getting priced, get like premium data from Nansen, for example, I think like their costs are like $500 a month. So most users can't make good use of this data. And so that's where we want to come in and start kind of democratizing all of this data. Eventually, it will become just a commodity, in our opinions, where everyone's going to have access to this information. So the best way is to get the next, billion users onto Web3 is to make that data freely available and as cheaply as possible. I think Mark already covered this, but just bit of context. My co-founder Adit, he was a developer at Microsoft for about 3 years. He built data pipelines for their internal Teams products and internal dashboarding. And I myself was an engineer at Citibank, where I primarily focused on data infrastructure and monitoring and uptime, keeping all of Citi's internal services, up and running. So today I wanted to give you guys a quick demo of what Blockscope can do. I tried to format this in the terms of DeFi, try to get a lens of it, if you will, so that there's a little bit more context. I hope this is educational. This is my first time running through this, so hopefully I'll have some good data for you guys. But let me get started. Yeah, so I'll be covering three use cases, 3 workflows, some contract analysis, some fund tracing, and some transaction decoding. It kind of covers the variety of tools that we're able to give, the very high level overviews that average users might want, and then someone who's technically adept, they might want to get some technical information, which we're capable of providing as well. So I'm just going to quickly switch over to my screen. Just see, I think okay, can you guys see the Blockscope kind of homepage? Perfect. Awesome. So the first flow I'm going to go through is going through our contract analytics. So these are real workflows that some of our beta users and customers have kind of asked us for, and that's how we've kind of built our systems. So one of our customers asked for, just the ability to get a high overview of what the contract's doing, and how many users are interacting with it over certain time periods, and they wanted it in kind of a UI kind of view. So we came up with the contract usage product. So I'll give you a brief overview of a couple of steps to compare Aave and Uniswap. So I have my notes here on the side. So this is the Aave V3 pool. We can just do a search on Ethereum over the last 180 days. Whoops. So it's going to take a couple seconds. While we do that, let me just go and load up the Uniswap V3 router as well. All right, and so we've got a loadout here. So we can see, this is for Aave V3. We can get total events emitted, events per day, just basic overall statistics, stuff that you could find on Etherscan with a little bit of digging, but you'd have to first extract that data, then you'd have to put it into your own charting, you'd have to get it in Excel. This is just a nice and simple way of going through and doing it. We give you clean views on who's most interacted with this protocol, amount of gas used, total transactions. So you can see there was a peak March 8th. of this year, and then activities kind of died down. There's the occasional peaks, but we're looking at 1,000 to 2,000 interactions per day for Aave. And then if we go to Uniswap, and Uniswap sometimes does take a time because usually it is more active. We'll give it a second. So that was the Uniswap router. Let me just grab a random Uniswap pool. And see what data we can extract from there. So sometimes we have so yeah, here we're able to see how many mints happened, how many swaps happened, burns. This all kind of data is good for like high level analytics. From here, you can do a lot where we give the ability for users to kind of set up their own custom kind of analytics. What we call watchtowers, where you can come in and you can define anything that you want to capture from the chain. And when I say anything, I do mean anything. All you have to do is give it an ABI. We're also able to do some more decoding based on other fields, but we find that most people care about ABI related stuff. But if I look for some Aave events, here's something that we created a couple months ago, and we can see all the events that the Aave protocol is emitting. Right here, we give you we try to optimistically decode as much as possible. So someone supplied a little while ago. A lot of people care about new contracts being created. So let me or Uniswap pools, sorry. So there is that deep sometimes there's that alpha of like coming to a pool early might help you gain some extra just trading advantages until there's no like arbitrage has been settled, the arbitrage opportunity. So a lot of people like to come in and start monitoring for these pools as soon as they come up, and they'll write their own internal systems to keep a track of this, and we just make it easier for them. Right now this watchtower is loading data into our own Blockscope front end, where we have like a set of charts and analytics views available for them. But over time, some of them want their own this data to be coming into their own systems via webhooks or other databases. So we're also able to deliver that data to our customers as well. Moving on, the next workflow I wanted to kind of show off is the Tracer product. Which is a product we've built just to see kind of money movements. It's a great starting off point for wallet discovery, to discover who these big whales are, where they're primarily moving money, and how much the money flow that's going on. OXScope, I believe, and Arkham both provide this functionality, but it's pay locked. OXScope gives you like a shallow dive, but we want to kind of give you a deeper dive of all the money that's going through. So here's something that was set up by my co-founder. But we basically started off with this jump wallet that we found on Etherscan. And from there, we're able to see, they've deposited large amounts of ETH. From there, this is some received funds from Tornado Cash. So we're able to like kind of also monitor for behavioral analytics. So, receiving funds from Tornado Cash, for example, Tornado Cash was put on the OFAC sanctions list. Obviously, it's not binding everywhere in the world, but but we do want to provide that level of clarity whenever we can, just so that you're not by mistake interacting with poor counterparties essentially. But we can go in and we can get more and more data. So if I try to try to expand this maybe and see if we get more data from here. So yeah, here someone received about 60,000 ETH from an OKX related wallet. And it really allows you to kind of see the the money flow across different wallets. And you're not only limited to based ETH tokens, you can put in whatever token you want. We allowed the native token versus a lot of stable coins, and you can put in your own custom token as you want as well. From there, you can kind of go in and you can, if you find a wallet of interest, you can take it and then you can create a new watchtower around it. So let's say I wanted to monitor whatever jump trade is doing. I can create a watchtower and then go in and monitor this address, put in the address that I want, jump trading wallet, and then I can just activate it, and I'll start capturing records as they come in. And then the final thing that I want to show, this is something that a lot of the DeFi developers wanted, which was transaction decoder. A lot of the times these guys are going in and they're like trying to picture what happened in a transaction, come up with any edge, to do gas optimizations. So we kind of set this up for them where this is a Uniswap swap transaction. And we're able to like, give a brief overview, somewhat like Etherscan, but then we can go in and then give you breakdowns at the trace level, a graphical breakdown of exactly what happened. And this allows our users who are more technically oriented to kind of try to find optimizations in the system to make their transactions as cheap as possible. And then we're also able to show money movements inside of the transaction. So from here, someone sent money to the universal router, which is the Uniswap router that everyone sends their transactions through. That went to WETH9, came back. This was a relatively simple ETH transfer. But this can get crazy. We were able to like show flash loan attacks, and this is like something that we're testing out, trying to provide some light on the security aspects of the blockchain. Unfortunately, not every actor in Web3 is out for the public benefit. And so we're able to kind of come in here and give an analysis of what happened inside of these transactions, and hopefully allow security professionals to analyze these hacks and hopefully come up with countermeasures for future deployments of their contracts. But this is at a high level what Blockscope does. We're just trying to make data really accessible and really cheap for the common consumer. But I'll leave it there. If you guys have any other questions, happy to take them.
This is great, Maharshi. Any question from the group?
I have a question. What's your target client? What is that, individual trader, or do you target institution?
We're not limiting ourselves to any particular client right now. We're able to offer a service to all levels of the data stack. At the infrastructure level, where if you just want pure data delivered to your own systems or to Blockscope, we're able to offer that. But what we're finding more and more is that enterprises and even retail clients, they don't care about the raw data as much as they care about the finalized metrics. So like, for example, in regular day trading, right, a lot of people look at graphs, but they don't really care about like the raw ticker data. They just care if like charts are going up or down. So that's where we're kind of moving into, is providing that visualization and analytics layer that is missing from the Web3 space.
And how is like, have you get many users sign up? Is Is that
Yeah,
do you have
so
trial period or something like people try
yeah, thanks for
them
asking.
out first? Or?
Yeah, thanks for asking. We've been building for about a year now. We're actually going to do like a public retail launch. Right now we had it closed to like a lot of our just industry clients that we've gotten through our connections at YC and our investors. But we're hoping that during ETH Toronto, we'll be able to do like a public retail launch. So we'll be able to get more of like the average consumers into the platform.
Do you have some kind of beta version that people trial for like a month or a few weeks or something to get comfortable and to see what?
Yep. No, we definitely
offer
are.
Before you charge.
Yep. No, for sure. We do have a trial period. Right now we've been offering that trial period like as like just individually. But what we're planning on doing is I think like a 2 to 4 week trial period for most people before we start charging.
Okay. Thank you.
Right. Any other question from the group? Well, if not, can you remind us where we can find you, Maharshi?
Oh yeah, you can find us at blockscope.co. I'll put it in the chat, or feel free to message me on LinkedIn or Maharshi at blockscope.tech.
Wonderful. Thank you so much. So if there is no other announcement or any parting thoughts, I think we're gonna get to give you back the gift of time and finish a little bit earlier today. Please find us at the Futurist Conference and our next meetup in Toronto. Do you have any idea when is our next face-to-face meetup? Of course, we'll be face-to-face in Futurists mid-August, but we'll have every 3 months we're doing a face-to-face meetup.
So next month, August 24th, we're going to have an online meetup again. And then in September 21st, we're going to do the in-person meetup. That's our once a quarter in-person meetup. And most likely will be at 111, the co-working space in downtown Toronto.
Wonderful. Thank you, Victor. So we're going to see you in August, mid-August at Futurists, and we're going to see you again in September at 111. And so stay tuned, everyone. Thank you for attending. And we'll post the recording very soon. Thanks, everyone, to attend tonight. Thanks. Nice to see you, Barry.
Thank you.
Have a good one, everyone.
Good night.